All right, Coca-Cola reported fiscal year 2022 fourth quarter earnings. I'm going to go through the major highlights of those earnings announcement with the context to connect it to whether or not the dividend is safe, whether it's sustainable, whether it changed in any dramatic fashion. So we're going to go through Coca-Cola earnings, do a brief review, less than 5 minutes, I would say, and look at whether that made the dividend safe. So let's get right into it. So revenue increased by 7% in the fourth quarter. Earnings per share declined by 16% to 47 cents compared to the fourth quarter of 2021. This was due to rising cost of goods sold, rising commodity prices, rising logistics prices. Inflation is just pinching businesses worldwide, and Coca-Cola was no different here. However, Coca-Cola did flex its pricing power. Sales were boosted by a 12% increase in prices and packaging mix. Surprisingly, despite the double-digit price increases, that only led to a 1% decrease in unit volume. That means consumers just kept on buying whatever it was that Coca-Cola was selling, despite the fact that they had higher prices. Cash flow from operations was 11 billion for 2022. That was down 13% from 2021. Still, 11 billion dollars in cash flow for a year is excellent. Coca-Cola paid 7.6 billion dollars in 2022 and has increased its dividend in each of the last 60 years. So, if you're a dividend stock investor, if you're looking for passive income, Coca-Cola offers a reliable, long-lasting dividend here. It's been increasing its its dividend payment for 60 years now, and it's forecasting 7.5% organic revenue growth for 2023 and currency neutral earnings per share growth of 8%. That means it's not accounting for what might happen in the currency market, whether the US dollar appreciates or depreciates against the other major currencies in the world. Coca-Cola is giving you a forecast excluding currency fluctuations. So the currency fluctuations might work in its favor or it might work against Coca-Cola. That's not included in the EPS estimate of growth of 8% for 2023. In my opinion, very good growth forecast for 2023 for Pepsi. 7.5% organic growth for this large beverage giant. This is above what the company typically grows at. So its growth rate is getting accelerated because of inflation, because it's able to pass along these price increases to its customers and thereby increase its sales, increase its revenue. However, it's not increasing sales and revenue, at least not in 2022. It didn't increase it enough to offset those rising costs, but in 2023 it is expected, right? Because it's saying, hey, we expect to grow our earnings per share by 8% in 2023. 2022, not so much, right? It didn't increase that as much. So that's good news for dividend stock investors. Another sign of good news is that Coca-Cola generates a lot of its revenue from away from home channels. They have a lot of exclusive relationships with merchants and restaurants, and think of its exclusive relationship with McDonald's, right? You can't get Pepsi in McDonald's. You could only get Coca-Cola. That's a powerful relationship for Coca-Cola. And now that economic reopening has gained momentum and consumers are going out more often, that's going to be good news for Coca-Cola in 2023. So overall, a good quarter for Coca-Cola. And especially if you're a dividend stock investor, it was good news for you as a dividend stock investor. So yes, its dividend is still safe. It's even more safe now than it was last year because it's forecasting these robust earnings growth, and because after it implemented these price increases, consumers kept on buying its products. So it demonstrated that it does have the pricing power to fight inflation. So there you have it. That's all I've got for this video. As always, I truly appreciate your viewership, and I really hope to see you next time for another video. Thanks for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.